Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts for BTC, see what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Okay guys, so if you haven't yet joined us in Discord, it's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out today. If you're looking for a little bit more from the crypto space, whether that's bear market strategy, project reviews, trading, then why not check out the Patreon services as well. Okay, let's get into this. Bitcoin paired up with USDT on the hourly chart. Binance is a data source, and you know, we've been tracking this for a while. We obviously have our low range here, 34,900. I think we've just come down to 34,200. We bounced from there. But this isn't really over yet. We've still got a long way to go down. As I was saying, there's a 5-wave move, and what we're trying to do here was trying to figure out where this 5th wave was likely. Now, we went to this 5th wave box briefly and then moved on out, and then we've come back down again. This is basically it was possible that this was our 5th wave. However, I think actually this is an extended 5th wave that's still going, so I'm not going to count that as the 5th wave. I think we're going to come down lower just yet before we even start to think about a bounce. So I'll leave this somewhere down here for now, and what we'll try to do is we'll try to actually kind of move things around just ever so slightly so we can kind of see, you know, what's going on here, right? So this is our original area where we're thinking, you know, it was the most common 5th wave, but because I think this is now going into a bit of an extension, as in if we were to measure this drop right here, move this over to the bounce, which would be about there, we can see that we come down and we come to this 1.618 range. So what I'm thinking is that we've got a subwave count here of 1, 2, 3. We'll wait for that bounce and then we come down lower into the 5th wave, right? So this is kind of now what I'm thinking, and wherever that final 5th wave lands will be our 5th wave. Now it is possible that it comes all the way down here, but this $32,000 range has changed because this was going to be another 5 waves down after a bounce up, right? So I think that we still have to have that bounce to the upside and before we can pull on down. So I'm going to remove this for now, and I won't speculate on that until we get to the later stages. Okay, so what I'll do is I'll also remove these because they're no longer valid, and what we'll do is we're kind of watching to see where this kind of extension goes and where it's going to land ultimately. Okay, if we take a look at the subwaves here, I would say that this is looking like it's probably going to be bouncing up for a 4th wave. We take a look at the stochastic RSI, we've got room to grow, so we should look for a small push up here, but it cannot cross this wave 1, so I will mark that with a horizontal ray just here. Okay, so it can't go higher than $35,258 because that would basically invalidate this move, unless of course it is some kind of ended diagonal, which in case the 4th wave could of course go higher, it wouldn't be an impulsive structure. But that's not what I would expect to happen here, but it's possible because, you know, anything is in crypto. So essentially we are looking for a push higher ever so slightly just to get that 4th wave raised and then another collapse down, and again, you know, we are talking probably in the $33,000 ranges. We should bounce up at some point though, and we should move up. I do not expect us to move up too far, and then we pull back down going lower, and again those low ranges could see us move down significantly lower, and you know, everything is kind of, you know, within the realms of possibility here, with the exception of those really extreme lows like 22k for example. It's possible that we come back down and we retest the low area that we had previously over this side, which she comes in I think at $28,000. That's a possible scenario. It is also possible that we come right down here and retest this one as a double bottom, this being about 32,900, so that's a possible scenario as well. So we want to be really cautious on this. Obviously we had this one just over here, which was our low of 34,200. So we kind of come down, hit that one. So yeah, I think for the most part we are right coming down into these ranges here, and it's possible that we break it down a little bit further. Now obviously we'd like to hold the $28,000 range if possible. If we lose that, then yeah, really we are talking about coming down even lower, but I don't think that's probable. So what I'm going to show is I'm going to show you why I don't think that's probable. Okay, we take a look at the daily stochastic RSI. We're finally right into the oversold area, which means a reversal is imminent. It is likely to happen soon. We take a look at the weekly. We are almost in that oversold area. Okay, and we take a look at how much time can be spent down in this weekly chart in this oversold area. It can be quite significant. It can last for a few weeks. So we could see a next kind of 4 weeks of just nothing but carnage, but I don't expect that. That wouldn't be something I'd be expecting to happen, because at the same time as this weekly chart being where it is, at least when we look at previously history-wise, we didn't have the monthly where the monthly was as well, so completely oversold. So when we have an oversold monthly, we're going to have an oversold weekly soon. We already have an oversold daily, oversold 8-hour, oversold 4-hour, and yeah, we basically are looking for a bit of a gearing up for a bit of a bounce to the upside. So nothing moves in straight lines. Finish this fifth wave down and then bounce on up is kind of what the expectations are, and then pull back down ever so slightly again. But I wouldn't want to see this kind of come out of the $30,000 range. It is possible though, and as time progresses, it becomes more probable. Okay, and let's take a look at obviously the data that's sat in the background. Why I think all of this is actually just a big bear trap. Things that are different this time around that were not around last time. We have a shrinkage of supply on exchanges. We saw another 81,000 Bitcoin left the exchanges yesterday as the accumulation continues. So with such significant accumulation, we are seeing a significant decrease of Bitcoin on the exchanges. This is the balance of Bitcoin on exchanges. It has been decreasing. I said this a lot recently, but basically we are at multi-year lows. As you can see, this comes back to August of 2018, so we haven't been this low since then, and it's an incredibly powerful kind of thing to kind of think about, the amount of shrinkage and the fact that Bitcoin was able to drive so much higher on the charts in 2021 with significantly more BTC available to retail investors, etc. Now obviously we could take this further. We could take a look at all the inflows which have dropped significantly in the last 24 to 48 hours. We could take a look at all the outflows. Again, they have dropped, but the net change is 81,000 Bitcoin more leaving than has gone on. So pretty powerful stuff. When we take a look at Bitcoin dominance, again, something that we talk about quite regularly with our Patreon members in our live AMAs. What I do is I'll just walk you through what this looks like. Up here was the pre-2017 bull run. You have the start of the bull run with Bitcoin dominance dropping as altcoins start to get some traction. You then see Bitcoin come up towards its all-time high and gains Bitcoin dominance. Okay, after that, you then see Bitcoin dominance crash all the way down towards our white line here at 32%. This yellow dashed line, by the way, guys, this is the Bitcoin all-time high. Okay, so we know that that dashed line is the all-time high, and if I zoom in on this, guys, you can see that Bitcoin dominance just here. And if I actually change this line, I'm going to make this green, and I will let me see if I can find it. I will dash that up as well, but I will make it a slightly smaller dash. There we go. So yeah, basically, guys, what you've got here is Bitcoin's dominance peaked about 1 week before Bitcoin's price. No, sorry, Bitcoin's dominance, yeah, did peak 1 week before the actual price peaked. Okay, so if I throw on here Bitcoin's price action. There we go, and then I bring this back down. You can see here Bitcoin dominance is the green line, and then Bitcoin's price is the yellow line. So Bitcoin got its dominance peaked just about a week before its actual all-time high. Okay, so it's an interesting kind of thing just to kind of keep an eye on. And then obviously from there, what you saw was a decrease, right, as basically Bitcoins as the altcoins start to get their traction, start to have the altcoin season. What you actually start to see here was the decrease of Bitcoin's dominance in terms of market share. So that was 32%. Once that happened, altcoins said basically then all the money starts to roll out of altcoins. Basically the bear market, you see Bitcoin start to get some traction. And again, this actually happens during 2018. And then basically, yeah, it's a little bit, fluctuates a little bit around here, but not too much all the way through until we kind of come to stabilization. Now, we stabilized Bitcoin dominance, pretty much from late 2018 into 2019, and then basically halfway through 2019, Bitcoin really started to get going again. For those who do not know, Bitcoin started its bull run in January of 2019. That's where it started to get some traction, and that is where you start to see Bitcoin dominance increase ever so slightly. It did, of course, reach its plateau here, and it just kind of goes sideways. Dominance may kind of bounces around a little bit, but it continues like this all the way until we got to January of 2021. And this is where alts really started to kick off in their kind of bull run, right? And for the most part, it was actually, if I can find it, right about here. Okay, so this particular area, okay, was where the altcoins started their bull run, and this is where they started their big run, okay? Now, this was the pandemic crash right here. Okay, you can see it's a really small fluctuation. Basically, the entire space crashed. A little bit more money came out of Bitcoin at that time, but that's only because Bitcoin was already quite high in terms of its dominance. Essentially, what you saw was then, kind of Bitcoin dominance kind of tumbled down ever so slightly. This would be, May through to about August. Yeah, about August. And then obviously we start to pull back down here as 2021 started. Now, the importance of understanding this is really key, because this pullback here is the same as this pullback here. Okay, these are the two trigger points. Now, what we've got going on here is basically a lot of wicks where data is being manipulated. Now, ultimately, we've had an explosion of shitcoins in this space, too much to the point where what we've actually seen is a significant increase in Bitcoin dominance and a decrease in Bitcoin dominance pretty rapidly. And this has pretty much been happening on the various different rug pulls and the scams that have been going on. And there were a lot of them in 2021. And, it really is still kind of going on. But essentially, it's manipulated this data quite a bit, right? So can't really take into consideration all these high wicks. So instead, what we have to do is just look at the generalized pattern, which is Bitcoin dominance here, just kind of getting itself into a tighter kind of wedge, right? I do expect Bitcoin dominance to come back up. I'm expecting it to move to about 55, maybe it'll push 60%. It should not go as high as it was previously. And then, of course, I think we're going to drop down to lower than 30% as we see Bitcoin have its all-time high and altcoins start. Okay, so there's a lot of kind of things going on when it comes to Bitcoin dominance. It is a relatively good metric, but with the sheer number of coins, it becomes less and less. Obviously, we think about history. There weren't many altcoins whatsoever. When we started this channel, there were like 3,000 altcoins. Now we're at like nearly 20,000, so significantly higher. And we should be very cautious over everything that's kind of going on with all of that. So just to kind of summarize, guys, I'm expecting us to pull back down in terms of the price action. We should be looking at some pretty reasonably low areas. I mean, 32k is probably going to be a bouncing point, but we could be 33 just based on this recent pattern. We should bounce up and then we should pull back down, and we're looking to stay above 30k if possible. 28k should be a double bottom scenario should that ever come. And the reason I say that is the sheer level of accumulation that has been going on. Over 4 million BTC has left the exchanges in 2022 alone. This is significant. The institutions, the whales, are manipulating you out of your crypto. They're making you feel like it is a bear market, making you think that this is a bear market, or we're just going into a bear market. So, by all kind of stretches of the imagination, if this is a bear market, this is getting very, very close to the bottom. It hasn't just started, and this accumulation that is going on is absolutely ridiculous. So do make sure that you understand exactly what it is that you're doing. I am not a financial advisor. I cannot give you financial advice. What I can do is tell you what is going on with this data, and all we are seeing is basically whales and institutions accumulating BTC, and they're doing so at a very rapid rate. Here we have the number of whales with more than 1,000 BTC. They have slightly decreased ever so slightly, but I do think this actually has something to do with the back of some whales actually putting a lot of Bitcoin onto the exchanges so that the whale alerts can pick up on it. I'm not sure whether they're going to dump those bags and why they would dump them at these particular points and not earlier. It wouldn't make a lot of sense to me, but they have been putting some Bitcoin onto the exchanges by the thousands. So these wallets here have fluctuated ever so slightly. The graph makes it look worse than it actually is. It's gone from 2,274 down to 2,247. So essentially you've lost about 30 whales here, where they might have moved that Bitcoin around a little bit. But what we do know is that the inflows to exchanges is lower than the outflows. The net difference is that more Bitcoin has left the exchanges. So even if the whales are putting it onto the exchanges, it isn't staying there for very long. Okay, so just keep a good eye out on what's actually going on here as we start to see more whales accumulating BTC, as we start to see Bitcoin leaving the exchanges by not the hundreds of thousands, but by the millions in the last 5 months. Bitcoin dominance is kind of, just trading sideways at the moment, but I am expecting a bit of a surge at the moment, or expecting a surge in the future, and we should then look for a huge decrease as altcoins really start to get some traction. Guys, I'm going to leave the video there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. With all that said, done out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.